Hey everyone, it is Julie here with TipRanks, and today we're taking a look at 3 AI stocks that were recently rated a buy by tech analyst Dan Ives. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're looking at the most recent buy ratings from analyst Dan Ives. Now he is a well-known 5-star analyst from Wedbush who ranks in the top 10% of all Wall Street analysts, and he believes that 2024 is the year of AI. So today we're going to take a look at those 3 companies he recently reiterated buy ratings on, see what their stock has been up to lately, and if the rest of Wall Street agrees. Of course, you can follow along over on the TipRanks website or by downloading the TipRanks mobile app using the link in the description down below. Now let's get right into Dan Ives' recent AI stock ratings. First up, we're taking a look at Zscaler. Their stock trades under the ticker ZS and is currently priced at $202 per share. Over the past year, they have grown 66%, but in this past week, they are in the red, down over 15%, and the stock has fallen about 5.5% just today. Zscaler is a network security specialist. The company operates through its cloud-native platform dubbed the Zero Trust Exchange, offering the ability to securely connect apps, devices, and users on customer networks of any type. The functionality, creating secure digital connections, builds trust as it improves user confidence and promotes business productivity. The Zero Trust Exchange operates at various levels, including user-to-app, app-to-app, and machine-to-machine connections. Now, as you saw on the chart, the stock has been falling this past week, and that was following their Q2 earnings back on February 29th. But the company did come out with an earnings and revenue beat, plus an increase to their future guidance. For their second quarter, Zscaler reported earnings per share of 76 cents, coming in comfortably ahead of the 58 cents anticipated, and revenue grew 35% year over year to $525 million. Their CEO said they delivered strong results with billings, revenue, and operating profit all coming in above their guidance as customer interest in the Zscaler Zero Trust Exchange platform remains high. Following their Q2 results, Wedbush analyst Dan Ives said that the stock remains a top name to own in the cybersecurity space. He noted that their Q2 results featured impressive top and bottom line beats yet again as the company drives forward with momentum in the zero trust space while maintaining impressive margin discipline. Overall, they continue to believe that they are a top name in the space to own as this cloud cybersecurity shift accelerates over the next decade, as this was an impressive quarter. Also weighing in on the stock with a buy rating was one analyst from Bernstein. They said that despite a post-earnings decrease in stock price and a deceleration in net revenue retention, they maintain an optimistic outlook. The company's high gross dollar retention rate in the high 90% range suggests a strong foundation of customer loyalty, which counters concerns about price competition or spend fatigue. Dan Ives' buy rating on the stock comes with a price target of $260, which would imply an upside potential of about 30%. And it would seem that the rest of Wall Street agrees. The Zscaler stock does come in as a strong buy with 34 current analyst ratings. That breaks down to 27 buys and 7 holds, with an average price target of $261 for an upside potential of about 29%. Down below, looking at all of our recent ratings coming in this past week, on the low end we have a couple hold ratings with upsides around 7%, and on the high end we have a $310 price target from Mizuho, which would be an upside of 55%. The second stock that has recently picked up a buy rating from Dan Ives is SoundHound AI. They trade under the ticker SOUN and are currently priced just shy of $5 per share. This stock has seen some huge growth here lately, up 52% overall in the past year, but 138% here in the last 3 months. However, the stock is now cooling down this past week, dropping nearly 26%, and they're down nearly 12% just today. SoundHound specializes in voice AI solutions. Their independent voice AI platform connects people to brands through customized conversational experiences that voice-enable products, services, and apps while giving companies access to their valuable data and analytics for greater control and brand ownership of the customer experience. Conversational AI, such as virtual agents, presents a solution for enterprises to enhance customer experience while reducing costs. One emerging use case is seen in the restaurant and drive-thru industry. SoundHound has demonstrated an impressive order completion rate of over 85% with its tech. The SoundHound stock had gained a lot of momentum in the past month on the news that NVIDIA had invested in the company, but the stock has been falling this past week after they did miss expectations in their last quarterly report. For their fourth quarter, they did report a loss per share of 7 cents, which was 1 cent wider than analysts had anticipated. And on the revenue side, things also fell short of expectations, with revenue coming in at $17.1 million, but that did increase 80% year over year. SoundHound did provide some favorable future outlook for the coming years as well. For 2024, they're anticipating sales between 63 and 77 million, while the analyst consensus was just above 69 million. Wedbush analyst Dan Ives sees SoundHound's strategic positioning in sectors such as autos, TV, and AI voice customer solutions as promising, and investments from companies like NVIDIA and SoftBank further validate their potential. Also recently weighing in on the stock was an analyst from D.A. Davidson. They note that the company continues to secure significant deals, such as the recent partnership with a leading EV maker in the US and a major original equipment manufacturer, which are expected to bolster unit volumes through 2037. And the development of a new revenue stream through collaboration with a notable chip company further supports the optimism surrounding SoundHound's market expansion. Dan Ives has a price target of $9 on the SoundHound stock, which is the street high and would be an upside of over 80%. Now, there are just 4 analyst ratings altogether, but the stock does come in as a strong buy. With 3 buys and 1 hold, the average price target comes in at $7.25 for an upside potential of 45% from current prices. On the low end, we do have a hold rating from Northland Securities with an upside of over 10%, and like I said, Dan Ives on our high end here with 80% upside. And third today, we're taking a look at C3 AI. They trade under the ticker AI and are currently priced at $31.74. Over the past year, they are up about 16% overall and climbed nearly 9% in the last 3 months, but have been cooling off this past week, down nearly 13%, falling 6.8% today. C3 AI is a software firm that integrates AI technology into its product lines. They offer a wide range of AI software and tools, including their AI applications, AI application platform, and AI development tools. The software has found use in a variety of sectors, including customer engagement, fraud detection, predictive maintenance, and supply chain optimization. They count numerous big names among their client base, including the oilfield services giant Baker Hughes and even the U.S. Air Force. The company reported their Q3 earnings report last week on February 28th. They came out with both an earnings and revenue beat and bumped up their annual sales guidance. For their Q3, they reported a loss per share of 13 cents, which was notably narrower than the anticipated loss of 25 cents per share. Revenue came in at $78.4 million, which increased 18% year over year. They said that they are leveraging their first-to-market advantage in enterprise AI, and powerful market demand trends drive strong business results. Along with his recent buy rating, Dan Ives also increased his price target on C3 AI. He said that we view this quarter as a step in the right direction for C3 as the company's entire product portfolio continues generating unprecedented demand for its AI platform to improve operations, optimize processes, and transform businesses. However, not all analysts agree on this one. We did have one analyst from D.A. Davidson that recently rated the stock a hold. They said that despite some positives, the company's growth guidance suggests a slight deceleration, and the reported decline in remaining performance obligation highlights challenges in the transition to a new revenue model. And the appointment of a new CFO introduces a measure of uncertainty, although the transition appears to be well planned. Dan Ives does rate C3 AI as a buy with a price target of $40, and that would be an upside of about 26% from current prices. But overall, the stock does come in as a hold. That is based on 3 buys, 7 holds, and 4 sell ratings. The average price target of $29 would actually be a downside of about 8% from current prices. Looking here down below, we can see the wide range of ratings on the stock here. On the high end, we do have several price targets with that upside of 26%, and the low end is a sell rating here from Wolfe Research with a downside of 55%. So that is a quick look at 3 AI stocks with recent buy ratings from tech analyst Dan Ives. Let me know your thoughts on these companies in the comments down below, and if you agree with Dan or not. I always appreciate hearing from you guys. Of course, keep in mind these videos are never a suggestion to buy or sell any specific stock, just keeping you up to date with what Wall Street is looking at, so please make sure you always stick to your own investment plan. Thank you guys so much for watching. I hope you have a great day, and I'll see you back here next time.